Hello students, I hope you will be fine. Welcome to my accounting channel. I am Daniel Shahid. Subject ACCA MA1 Kaplan textbook chapter number 3, classification of cost and cost behavior. Dear students, the video includes relation of cost with activity, cost analysis by behavior, classification of cost by behavior. Dear students, let us start from the relation of cost with activity. The basic idea is that there is a relation of cost with an activity. Every cost is initiated by a particular activity. So there is always an activity behind a cost that generates cost. For example, let us consider the example of electricity bill. Why we face electricity bill? You think over it. You thought. So we face electricity bill because we use electricity. We face gas bill because we use gas. We pay the water charges because we use water. We pay the telephone bills because we use telephone. And why we face the fuel cost? You think. So we face the fuel cost because we use the fuels in our vehicles. And why we face transport costs? Because we use transportation services. Why we pay the restaurant bill? You think over it. Yes, because we take meal at restaurant. And why we pay air travel cost? Because we use airline services. So you have noticed that every cost has a related activity behind, and that particular activity is responsible for the generation of that cost. That particular activity generates that cost. So let us take an example of a furniture business. A furniture business bears some costs because they use resources. So wood, nails, carpenter, paints and varnish, electricity, gas and water charges and machine, all of the costs are faced by a furniture business in order to manufacture one cupboard or 10 cupboards. So over here the activity is the production of cupboards. So because of the activity they face cost. So if the activity varies and with that cost also varies, means if the activity is increased from 1 cupboard to 10 cupboards, then the cost also increases. Or if the activity decreases from 10 cupboards to 1 cupboard, then the cost also decreases. Such a cost is called variable cost. So the criteria behind the behavioral classification of cost, dear students, the idea of relation of cost with the activity is now known to us. So the criteria is that the basic idea we have discussed it on the last slide, that every cost is generated by a related activity, and that particular activity is responsible for that cost. But now the criteria is that whether the cost varies with that level of activity, means if the activity increases, whether the cost increase, or if the activity decreases, whether the cost decrease. So cost, and the reason of the cost is activity. If the activity varies and the cost varies too, let us take an example of electricity usage. If you use electricity In a higher mode, we will face the electricity bill of higher charges, and if we use low electricity, we will face lower electricity bill. So such a cost that varies due to variation in the activity, mean by increase in the usage, by increase in the activity, the cost increases, and by decrease in activity, the cost decreases. So such a cost is called variable cost. On the other hand side, there is another cost that is unchanged, that remains unchanged if the activity level varies. For example, the production is the activity we have considered on the last slide, that in a business the production is the activity. So if the production varies, the rent of the factory, it is again unchanged, it does not varies. If the production increases, the rent of the factory will not increase and will be unchanged. And if the production will decrease from a certain level, again the rent of the factory will not decrease. So you have to pay the same rent you have contracted with the owner of the factory. So such a cost that do not varies with level of activity is called fixed cost. Cost analysis by behavior. So we got two categories on the behavioral classification of cost grounds. The first is variable cost, the second is fixed cost. We notice that variable costs are costs that change in total with level of activity, whereas fixed costs are costs that are not affected in total by the level of activity. These are two main categories. Now there is another category which is a mixture of variable and fixed cost called semi-variable, semi-fixed or mixed cost. Its example is a telephone bill that includes a line rental which is fixed and charging per unit of telephone units consumed. So that is an example for semi-variable, semi-fixed or mixed cost. And the fourth category is, it's an extension of fixed cost which is called step fixed cost. So step fixed cost, the fixed cost is actually fixed within a relevant range. We'll discuss this topic in the next slide. Let us continue to the next slide. So finally we got four classifications on the grounds of behavioral classification of cost. The first is variable cost that change in total with level of activity. The example is raw material cost for 1 unit is if $50, then for 10 units it will be $500. So it's variable cost. Raw material cost, labor cost, electricity, gas, all of these costs that varies with level of activity are variable, whereas two main examples of fixed costs are rent and salaries. So fixed costs are costs that are not affected in total by the level of activity. The example over here is the rent, which is 2000. So if you manufacture 2 units or 200 units, the business have to pay $2,000 rent per month. If the business produce even 0 units, if the production falls to 0 and no units is manufactured, even then the business have to pay $2,000 per month. So the third category is semi-variable, semi-fixed and mixed cost that contains both an element of fixed and a variable element of cost. So the example is telephone bill. The semi-variable cost includes a line rental which is fixed and a variable cost for the calls. Electricity bill can also be an example, and the remuneration of salesman or sales representative can also be considered as an example for semi-variable, semi-fixed or mixed cost, as his remuneration includes a basic salary which is fixed plus the commission which is paid on the number of units sold. The fourth category is step fixed cost. Step fixed costs are costs that are constant for a relevant range of activity. Let's take an example of the warehouse. For example, the business have arranged a warehouse on rent, and the rent is $500, and the capacity of the warehouse is to store a maximum up to the capacity of 100 units. So from the storage of 1 unit to 100 units, this is the relevant range. This is the first range. If the business has to store more than 100 units, they have to arrange another warehouse. For that, the fixed cost will jump to another level, and the fixed cost will now become $1,000 because they need one extra warehouse for one extra unit over and above the 100 unit. Thank you for watching. You better like the video, subscribe the channel. You can call or WhatsApp for the information about the classes and other details. You can comment on the channel. You can comment on the call or WhatsApp number. Thanks for watching. Thank you very much. Take care.